So, what's actually changing with your money in 2026? There are some major shifts on the horizon for student loans, retirement savings, and even the Federal Reserve. So, what does it all mean for you? Let's dive in and break it all down.
Yep, we're looking at your 2026 financial forecast. First up, we're going to tackle a massive change to student loans that you absolutely need to know about. Then, we'll get into the expert-approved playbook for your savings and retirement. From there, we'll zoom out to the big picture and look at the Fed's next potential move. And to wrap it all up, we'll bring it home with a super simple action plan you can use right away.
All right, let's get right into it. If you're a grad student or even just thinking about grad school, you need to listen up. This is huge. The rules for federal student loans, they're getting a major overhaul. Okay, so what's the big deal? Here's the headlines starting July 1st, 2026. The Grad Plus loan program, it's just gone for new borrowers. Poof. And look, for years, this was the main way people covered the full cost of grad school. So yeah, this is a total game changer. And it doesn't stop there. They're also slapping on a hard cap. We're talking a new total borrowing limit of $100,000 in federal direct unsubsidized loans for a graduate degree program. That's it, $100 grand. But it's not all bad news. They're actually simplifying things a lot. If you get a new loan after that July 1st, 2026 date, you basically get two choices for repayment. That's it. Forget that whole confusing mess of options we have now. You'll have a standard plan with a fixed payment or an income-driven plan. It's a massive, massive step toward making this whole process way less of a headache. Okay, enough about debt. Let's talk about building wealth. We're switching gears to savings. And when it comes to retirement, listen, the order you do things in, it matters a lot. So here's the playbook that all the experts swear by. First up, step one. This is the big one. Seriously, it's non-negotiable. You have to contribute to your 401k enough to get your full employer match. I mean, think about it. It's a 100% return on your money right off the bat. It is literally free cash. You can't leave that on the table. Okay, once you've secured the free money, you move on to step two, maxing out your Roth IRA. For 2026, that's $7 grand. Then, and only then, if you've got more to save, you go back for step three and pump as much as you can into that 401k. So you're probably asking, why that specific order? It's a great question, and it really all comes down to one thing: taxes. Do you want to pay them now or pay them later? A traditional 401k gives you a tax break right now, which is nice, but you'll pay taxes when you take the money out in retirement. A Roth IRA is the opposite. You pay taxes on the money before it goes in, but then every single dollar you withdraw in retirement, 100% tax-free. It's a huge difference. Okay, so that's the long game, right? Retirement. But what about money you might need sooner, like for an emergency or a down payment? That cash needs a good home too. You can't just let it sit around. And check this out. The difference between a good home and a bad one is, well, it's staggering. We're seeing high-yield savings accounts in 2026 with rates around 4.5%, sometimes even higher. Now, compare that to your typical old-school savings account from a big bank. You're lucky if you get 0.5%. It's not even close. We're talking about your money actually making money for you, instead of just sitting there getting eaten away by inflation. All right, let's pull back from our own bank accounts for a minute and look at the big picture. There could be a new sheriff in town at the Federal Reserve, and trust me, who runs the Fed has a direct line to your wallet. So, real quick, what does the Fed even do? They've basically got two main jobs, what they call their dual mandate. Job one, keep people employed. Job two, keep prices from going crazy. In other words, control inflation. That's their whole reason for being. Now, the hearing for this nominee, Kevin Warsh, got pretty heated, as you can imagine. For instance, you had Senator Elizabeth Warren, who came out swinging, basically accusing him of just being a sock puppet for the president and not independent. But on the flip side, when Warsh was questioned about this directly in the hearing, he pushed back hard. He made it clear he was committed to the Fed's independence and would not be swayed by political pressure, saying his decisions would be all about the economic data. So, okay, let's say he gets the job. What would that actually mean? Well, it seems to boil down to three main things. First, getting back to basics, really focusing on just those two jobs, employment and prices. Second, getting super tough on inflation, aiming for a really strict 2% goal. Now, why does that matter to you? A stricter target could mean higher interest rates for longer, and that affects your mortgage, your car loan, your credit card rates, everything. And third, he might ditch something called forward guidance. You know the dot plot? That's the Fed trying to tell us what they think they'll do in the future. He might just get rid of that. Phew. Okay, that was a lot of information, I know. So let's bring it all back home. Let's take everything we've talked about and boil it down to a simple, powerful action plan that you can start on, like, today. All right, here it is, your 2026 financial checklist. Number 1, and this is the easiest win you'll get all year. Log into your 401k right now and double-check that you're getting every last penny of your employer match. Don't leave free money on the table. Number 2, start planning how you're going to fund your IRA for the year. Number 3, so simple but so important and everybody forgets, go check the beneficiaries on all of your accounts, seriously. And last but not least, if you're a grad student, you need to call your financial aid office ASAP to figure out exactly how these new loan rules are going to hit you. Look, at the end of the day, the most important thing isn't learning more, it's doing something. Your financial progress is all about those small, consistent actions that add up over time. They compound. So let me leave you with this one question. Out of everything we talked about, what is the one single action you are going to take today?